This month, two companies filed to go public. Their combined paper value, nearly $2 trillion. One of them expects to lose $14 billion this year. On purpose. It doesn't plan to make a single dollar of profit until 2030. And Wall Street's reaction? A stampede to get in. OpenAI and Anthropic filed within a week of each other, chasing SpaceX's record IPO through the open window. To normal humans, this looks insane. Who pays $1 trillion for a money bonfire? But there's a machine here, an old one. And once you see it, every crazy IPO makes sense, even when it shouldn't. Start with the misconception. An IPO doesn't sell a company's present. Nobody buying OpenAI stock is buying this year's $14 billion loss. A share is a claim on every future year, forever. Price it, and today barely matters. The price is mostly tomorrow, discounted backwards. That's why a profitable, boring company can be worth less than a bleeding rocket ship. The market isn't grading this quarter. It's betting on the size of the eventual empire. Losses today plus dominance tomorrow can mathematically beat profits today plus stagnation tomorrow. The IPO sells a telescope pointed at the future. The question is only whether the telescope is honest. Every money-losing IPO since 1997 deploys the same shield. Amazon. Amazon went public and profitable, and stayed unprofitable for years. While critics wrote its obituary annually, it was pouring every dollar into warehouses, logistics, and market share. The losses weren't failure. They were the strategy. Buy the future before competitors can. Anyone who held from that IPO got one of the great fortunes of the century. So now we lose money like Amazon did, is the most valuable sentence in finance. But notice what the defense skips. For every Amazon, a graveyard, WeWork, Pets.com, 100 SPACs, lost money exactly as bravely, and just kept losing it. 2021's poster child, Rivian, an EV startup that had delivered roughly 1,000 trucks, went public at a valuation bigger than Ford. Within 2 years, the stock had lost about 90%. And the pattern is the rule, not the exception. At the dot-com peak, and again in 2021, roughly 4 out of 5 companies going public were unprofitable. The market keeps buying telescopes. Losses are losses. Whether they're an investment is only knowable later. So, how do you tell an Amazon from a bonfire? You read what they're forced to publish, the S1. The filing the company writes before an IPO is hundreds of pages of legally required honesty. The numbers here aren't the press release. Lying in an S1 is a crime. Bragging in a keynote is marketing. In OpenAI's case, the disclosed shape is $14 billion of expected losses this year, break-even pushed to 2030. Anthropic projects positive cash flow by 2027, same industry, very different burn. And the analysts layered on the brutal arithmetic. One bank pegs the funding gap. Money still needed beyond everything raised, at $207 billion by 2030. Which means the IPO isn't the finish line. It's a refueling stop. Want proof the document matters? 2019 ran the experiment, twice, side by side. Uber filed honestly ugly numbers, an $8 billion annual loss. It went public anyway at $82 billion. The market read it, priced it, and waited. 4 years later, the first real profit. WeWork filed the same year, valued at $47 billion. Then investors actually read the S1. Inside, enormous losses, no stated path out, and governance so strange it became a business school course. Within weeks, the valuation collapsed, the IPO was canceled, and the founder was gone. Same year, same document, opposite endings. The S1 didn't fail WeWork, it caught it. The filter worked. Why are they filing now in the same month? One phrase, the IPO window. Windows open when investors are euphoric and close when they're scared. Miss one, and you might wait years for the next. SpaceX's June IPO, the largest ever, up 11% on day one, minting the first trillionaire, proved the public will pay enormous prices for story-rich giants. The window is wide open. So Anthropic filed June 1st. OpenAI, June 8th. When the door opens, everyone runs through at once. partly because everyone running is what closes it. Companies don't IPO when they're ready. They IPO when the market is. Follow the seats at the table. Selling. Early investors and employees who bought in at a fraction of today's number. For them, the IPO converts a decade of paper into actual money. Microsoft alone holds roughly 27% of OpenAI's for-profit arm. Buying. Index funds, pensions, and you, the public, arriving last at the highest price so far. That's not automatically sinister. Public buyers got Amazon, too. But understand the trade. Insiders are selling certainty today. The public is buying a story about 2030. When someone with perfect information sells to someone with a brokerage app, the price isn't just a number. It's an argument. There's one more wrinkle, specific to this AI moment. These companies don't just need money. They need unprecedented, repeating oceans of it, for chips, data centers, and electricity. A $200 billion funding gap means the IPO money gets burned, and then they must raise again. And again. Public markets become the recurring fuel line for the entire AI build-out. We made a whole video on the AI boom funding itself in a circle, vendors investing in customers who buy from the vendors. The IPOs bolt the public's retirement money onto that loop. If the AI future arrives on schedule, this is how it gets paid for. If it runs late, the public is now the one holding the fuel bill. So, the Field Guide Minute. When the next glamorous money loser files, check 4 things. 1. The path. Is there a dated route to break even, or just vibes? OpenAI says 2030. Hold them to it. 2. Unit economics. Does each additional customer lose money or make it? Scale only fixes the second kind. 3. Who's selling? A little insider selling is normal. A stampede is a signal. 4. The moat. Losses are only an investment if they're buying something competitors can't copy. Amazon passed all 4. Most of the graveyard failed at least 2. The S. 1 is public, free, and searchable. The market's best-kept secret is a 400-page document nobody reads. So, a company losing $14 billion a year can be worth nearly $1 trillion because an IPO sells the future, not the year, and because Amazon proved the trick can work once. The machine itself is neutral. It funded Amazon, and it funded the graveyard with identical enthusiasm. The window is open now. The filings are in. The public gets to vote with its savings. Just remember what the ticket actually says. You're not buying what the company is. You're buying what everyone agrees to pretend it will become.